Oh, hello, it's me, Kenny Paul Curry. It is the last day of the third quarter in 2021. We are about to go into the final stretch of 2021. And what is there to say? Oh my God, so much is going on, so much to look forward to, so much to kind of be concerned about, but also so much to be kind of bullish about, right? And look forward about. So let's talk about what it is. We'll start by saying that Chucky came out and said, guess what? We made a deal. There's no government shutdown. Oh, wow, surprise. Next up is the debt ceiling. Anyone want to bet on that outcome? And then we got, infrastructure one and infrastructure two, a total of $5+ trillion that they want to spend. So let's see where that goes. And like I said, today is the end of the quarter. So we're going to get ready for a Santa Claus rally. Or are we? And what do we have for dinner tonight? We're going to try the roast duck with an orange honey glaze. Simple to make, takes some time, but it is so delicious. So let's just talk about what happened yesterday, right? Because after the drubbing stocks took on Tuesday, yesterday it felt like they wanted to come back, right? Yesterday it felt like, at least in the morning, that stocks were going to rally again. So the fluctuation continued, right? Stocks bounced around really all day yesterday, trying to claw back a lot of those losses, with both the Dow and the S&P actually succeeding, right, ending in positive territory, while the Nasdaq and the Russell and the transports continue to end lower once again. This all as the drama in D.C. dominated the news, sending shivers up and down the spines of the media, while investors mostly ignored it. Not even important. It's great for entertainment, but it's not really going to price stocks. Many continue to ask, will the government shut down on Thursday at midnight, or is it all about the drama? And then what about the debt ceiling? Will the bozos do something about that as well? I mean, does anyone really believe that neither's going to get done? Come on. Let's be honest. In the end, all the angst built around these two issues is a non-event for the markets and ultimately for investors. But what is important to investors is inflation, interest rates, tapering, and the pace at which all those three things are going to happen, because that's what will affect stock prices. By the end of the day, the Dow added 90 points. The S&P was up about 7. The Nasdaq lost 34. The Russell gave back 5 points. And the transports ended lower by 78 points, right? Wasn't a lot of action. No hysteria. It was just kind of more churning. The 10-year Treasury yield, which is up more than 20% in just a week, did back off a bit yesterday morning, and that gave renewed life to stocks. But as the day wore on, Treasury yields moved up again, and that put pressure on those sexy high growth names and once again raised concerns over the health and robustness of this recovery and the economy. It's all very complicated, right? Now, the Nasdaq, just look, the Nasdaq is off about 6% as of yesterday from the September highs. But that does little to detail the extent of the damage suffered in the space over the last 6 months or so. Zoom, for instance, is down 34% since the summer. It's down 55% in the last year. Roku down 38%, Coin down 20%, Amazon down 13%, Square down 18%, Facebook down 11%, Google down 7.5%, Microsoft down 7%, Hack, which is cybersecurity, is down 8.2%, and the big tech disruptor ARK is off 17%. Since June, it's off 31% since February. And some of the names within that are down even more. So yesterday, tech, the XLK, communications, XLC, and basic materials, XLB, all ended slightly lower, continuing in their downtrend, while utilities, consumer staples, healthcare, and real estate, which have been under pressure recently, all led the way higher, if you want to talk about higher. The value trade now is up 15.7% year to date, while the growth trade is up 16.7%, suggesting that the fight there continues as value is gaining ground on growth. The VIX fell 3% as the fear subsided, but that does remain elevated, suggesting fear has not gone by any stretch. And energy ended the day flat after its recent surge over the past week, suggesting that it just needs some time to digest the move before moving even higher still, because I do believe it's going higher. Financials, having moved up 7% in the last week, are also consolidating ahead of what I believe is going to be another leg higher in the months ahead. This as rates continue to climb and the tapering takes root. If the tapering takes root, right? Because that's still a wild card. Yes, no, maybe yes, maybe no. This morning, Chucky comes out and announces, guess what? Oh my, there's no government shutdown. Can you imagine that? The clowns averted that crisis, and now the focus turns to the debt ceiling and the whole vote, and then the vote on both the $1.5 trillion and the $3.5 trillion infrastructure and human infrastructure bills, both part of Joey's Build Back America plan. And that will be a fight worthy of primetime viewing, as the Vegas bookies are taking bets on whether it lives or dies. I expect the progressive left is going to cave on the end to holding up the first bill without a vote in the second bill, because Nancy, Chucky, and Joey are going to make all kinds of promises to get them on board. By the way, the bill is over 2,700 pages long, and my bet is that not one single elected official in D.C. has any clue what's in there. Remember, as Nancy told us during the Obama administration when it came to health care, we need to pass it first to find out what's in there. Am I being too cynical? I hope not. But maybe I am. This morning is the final day of the third quarter, and we do expect to see last-minute window dressing. Futures are up as the sun prepares to rise. Dow's up 200, the S&P's up 25, Nasdaq's up 70, the Russell's ahead by 20. Expect the media to credit today's move to Chucky's announcement that the government's not going to shut its doors at midnight, to which I would say that's laughable. This morning's move is not related to that, because anyone that's been in the markets for any length of time is paying zero attention to the headline. Zero. Although the algos might not understand that in you, and all they understand is whether or not the headline is positive or negative. And while that headline appears to be positive on its own, it is not, in my opinion, the market mover. It has nothing to do with it. It's Thursday, and the economic data today includes the usual suspects. Initial jobless claims expected of 330,000. Continuing claims of 202.8 million. Final second quarter GDP expectation 6.6%. Not a surprise. And personal consumption of plus 11.9%. European markets are mixed. The UK economy grew by 5.5% in the second quarter. This ahead of the estimate of 4.8%. So that's a positive. Consumer spending in France rose by 1% versus the estimate of 0.1%. Overnight, we learned that China's manufacturing PMI for September fell to 49.6, below the expectation of 50.1 and below the magic neutral 50 line, which takes that reading into the contraction zone versus expansionary zone. But investors are not even thinking about it. In fact, I continue to why investors even put money to work in that country, given the massive government risk every single day. There are so many other places to put your money to work that'll have much higher reward, never mind peace of mind. But that's an individual decision. You do what you want. At 6 o'clock this morning, markets in the region and across Europe are all up between 0.1% and 0.3%. Not a big deal. Bitcoin is up 5% this morning, now trading at 43,500. Ethereum is up 6.5%, trading just above 3,000. The S&P ended the day yesterday at 43.59 after testing in a very tight range of 43.55, 43.85. It leaves us smack in the middle of the trend lines, right between 43.43 and 44.45. It doesn't feel like a runaway day at all, but nor does it feel like it's going to collapse. My sense is that the quarter is going to end right in here, solidly comforted by both the support and resistance level. Tomorrow begins the end of the year, the fourth quarter. We still have to get through October, which can be a volatile month, and then we're into the year-end Santa Claus rally. Or will it? Right? Is Jay Powell going to screw it up by launching a taper in the final 2 months? Or is it that he's just going to announce the taper but not implement it until the new year? In any event, it is what it is. And while everyone understands it's coming, until it gets here, it's not really here. And when it does get here, investors are going to have to price the risk of what happens to markets, treasuries and mortgages, now that the buyer of last resort is no longer standing there supporting those markets. And until that happens, no one can really predict what the result will be, which suggests you should stick to your plan. Make sure you have a strong portfolio. Get ready for what's next. Keep some powder dry on the side to take advantage of any weakness, which I think we're going to get, right? I still think the path of least resistance is lower in the weeks ahead. And that's going to provide better long-term opportunities for the patient investor. Remember, we've tested the intermediate trend line support at 43.41 twice in the last 2 weeks, and most likely we'll have to test it again. That's going to suggest whether it holds or it doesn't. Now, also remember you can text the word invest to 21,000 on your cell phone to get my digital business card. Feel free to download it, send me off an email or a text. Happy to engage, talk markets, planning, thoughts, concerns, ideas, whatever you like. I'm always happy to talk about it. No, And you can follow me on Twitter or TikTok at Kenny Polcari is my handle, and on Instagram at KennyP1961. So what do we have for dinner tonight? We're going to make roast duck, right? It's got this orange honey glaze, which is really delicious. The only issue with roast duck is it takes 4 hours to cook. So you need times on your side. You can't run home, after a busy day and just pop it in the oven and expect it to be done in 20 minutes. That ain't happening. So this is like a weekend dish. Maybe it's a Saturday night dish or a Sunday afternoon dish. But it's really delicious as it's got this orange honey glaze. So, and especially your roasting duck seems a little bit appropriate right now, right? Because it feels like we're about to get roasted. In any event, for this you need the duck. You need salt and pepper. You need honey, molasses, orange juice, soy sauce, and chili sauce, which is optional. But if you want a little bit spicy, then you can add the chili sauce. You want to begin by preheating your oven to 300 degrees. 300, right? Because this is why it takes longer, because the temperature is a little bit lower. So the oven's at 300. When you buy the duck at the butcher, make sure that the butcher, he or she, cleans it all out, right? Removing everything from the cavity, trimming off the excess fat on both ends, removing any of the pieces of quill that might be still stuck in the skin. When you get it home, you're going to score the skin with a knife in a crisscross pattern. Don't cut into the meat, just the skin, so don't go too deep. This allows for more of the fat to come out, causing the skin to become really nice and crispy. And you want to tie the legs together with cooking twine, right, before you put it in the oven. You want to season it with salt and pepper. That's it, salt and pepper. You want to place it on a V-shaped rack in a roasting pan in your oven. Put it in the oven and roast it for 1 hour. Go back there, now flip them over. Roast it for another hour. You got to repeat this for 2 more hours. So in another hour, go back, flip them again. And then in the 4th hour, go back and flip them again. Right? It helps the skin get really golden and crispy. Now, while that's happening, you want to make the honey glaze. Combine a half a cup of honey, a half a cup of molasses, a quarter cup of orange juice, and maybe two tablespoons of soy sauce. Here's where you'd also add the chili sauce if you prefer. I wouldn't add a lot, but you do what you want. Pour it into a saucepan, heat it up over medium heat until it becomes thick, almost syrupy-like, right? Once it does that, then just set it aside. Take it off the heat and set it aside. After the 4th hour, remove the duck from the oven. Turn the oven up to 400 degrees. Drain all the fat from the roasting pan, but save it because duck fat is really good in mashed potatoes. It even works great as a rub on chicken, right? Before you roast the chicken. Now, put the duck back in the oven. Do not glaze it yet. Let it roast for 10 more minutes at 400 degrees. Remove it. Now brush the glaze all over the bird. Place it back in the oven, breast side up, and roast for another 5 minutes or so. That should be it. Pull it out, let it rest for 5 minutes. Serve this with a big salad, the vegetable of your choice. I would serve it with something green, whether it be a French cut green beans. It might be sauteed spinach, or maybe it's broccolini, something green. I like green with this. And then you have a big salad. It's got tomatoes, cucumbers, scallions. You put some fresh mutts in there, salt, pepper, oregano, and then dress it with fresh lemon juice and some olive oil. Not a lot, just enough to give it enough flavor, right? You would serve this with again a red wine. I wouldn't go heavy, but I don't really like heavy red wines anyway, so I tend to go to the lighter red wines, meaning like, I keep saying a Chianti or Pinot Noir just because that's what I prefer. If I'm gonna have steak though, I'm gonna have the Brunello di Montalcino, which is like velvet, right? That is a little bit heavier, but that's a different dish, right? In any event, it is Thursday morning. I will not be writing a note tomorrow because I'll be in New York. Traveling tonight, so I'll be in New York for the weekend, but I will be back on Monday. So take a look for me on Monday. In any event, have a great weekend and take good care.